Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Wednesday, the 22nd of November 2017, and there's not really much happening this morning. There's loads of data out of the US, and then later on early evening we've got the Fed minutes, so it's kind of Deadsville. So I thought what I'd do, rather than talk about a potential setup, just talk about one that occurred yesterday. This is an hourly chart on the pound Swiss. We've got a well-defined level of resistance, hit several times, that's what we like, and then we have, importantly, a reaction off the level. There's an internal level there as well. It's kind of that zone, and there's your entry cheese, right? That's the cheese that tempts in the mouse. One of my students, Simon, yesterday I was talking to him. We had a good laugh conversation yesterday. He's a student from the UK, and I call this entry cheese, and he said, I've got a new phrase for that, Mark. I said, what's that? He said, cheese on toast. I said, go on then. He says, there's the cheese, he says, and there's the toast. So I quite like that, but I'm gonna have to ask his permission if I can steal the phrase off him. I better get his okay before I start plagiarising him. But yeah, cheese on toast, great, I love it. And but I do call it entry cheese, and it's just that cheese that tempts the trader in off the sidelines to take some risk, like a mouse is tempted in to nibble at the block of cheese, and then bang, they get nailed. Sorry for all you animal lovers out there. And it's the same thing. Entry cheese or cheese on toast is the cheese that tempts the trader in off the sidelines to take some risk. And when you're looking at manipulations, you need it there before the manipulation. Let me explain to you why. But first of all, you've got to understand where these traders are. So let me just quickly cover that. If you think about how traders take trades, it's always based off historical analysis. You're always looking at previous structures, and that's your analysis, right? And then you come to a conclusion. You go, oh, okay, this level's been touched, a few times. If it comes back into that area, I'm gonna sell. But most people don't just place orders at levels, right? That's folly for most people. Death by 1,000 cuts. It sounds like a great idea. You'll hear certain educators talk about that. It's absolute bollocks, because you'll just keep getting stopped out, because levels, as you well know, get breached all the time. So it would be lovely just to go, oh, there's a level of resistance. You know what I'm going to do? I'm just going to place a little order with a tiny little tight stop, and I'll nip off a perfect entry, and I'll make a ton of money as a trader, right? Wouldn't that be wonderful? Unfortunately, that's not it's a utopia, and it isn't reality. So what happens is traders then look for the entry cheese, the reaction off the level that gives them a sense that their analysis was correct. So we want to become our opponents. We want to become the level trader in this example, right? There are only a handful of disciplines that traders are participating in the financial markets, and what that does for us is that makes it easy for us to see them on the chart. So I want you to become the level trader, right? And if you are a level trader, or if you're not a level trader, you've probably done level trading at some stage in your career, right? We all kind of try different things: breakout trading, retracement trading, level trading, right? Those are the three core major disciplines anybody's trading at any one time. So that makes it easy for us to reverse engineer, hack the strategies of those traders. And here we can see that there's some level traders, right, selling at resistance, no brainer, and we know they're there because price is reacting off the level. That's all we need to know about it. There's our opponents, right? And if you're not thinking about the financial markets from that perspective, that it's you against the world, then you're very misguided. So we want to see where our opponents are on the chart, and the entry cheese tells us where they are. But it all stems from that historical analysis, and our ability to spot them from there becomes easy when we have that understanding of the level. Now, they have an understanding of that level too, right? They're doing that historical analysis to then come to the point where they think that there's a potential opportunity to be a seller, right? They're not, as I said, they're not going to just place orders. They get a handful of people doing that. They don't do it for very long. What they want to see is price come to the level, and there'd be some type of reaction of the level that gives them some sense that their analysis was correct. It sort of strokes their ego, and oh right, yeah, I had this level chalked up. It's reacting in a manner which is how I would anticipate it would if this level's going to hold, just as it had done here, right, etc. Great, I'm gonna take a trade. You need that to occur before the manipulation. So I'm going to explain to you why that is right now. So let me just clear this up. Now then, when you look at a level, not all levels are going to have stops accumulating at them. Now, if you'd have said to me in this example up to this point, or if we were looking at this level in real time and everything to the right of it, discount all of that, none of that's happened yet, and I was looking at that, that's not a level where there's any stops residing, so there's no money sat above there. Why? How do I know that for certain? Well, because the traders who sold in here made some good money, and imagine that was just like a range, just for the sake of the explanation. Right, imagine that was a well-defined range. It didn't quite make it there, so those sellers are probably still here when it comes back that second time, because it didn't make it across the range in terms of this is where they would target, right, to take profit. It didn't make it, so it comes back into the level and you get some more sellers take trades. Now at this point there is an accumulation of stops, but if it then reaches the other side of the level, the stops are gone, right? Because all these traders up here have bounced. They've gone, they've took the money, they're happy as Larry, whoever Larry is, right? They made the money and they've bounced. So there's no stops when price comes back to the level, but there may start to be an accumulation of stops, but there's just none there presently, right? Does that make sense? Hope that makes sense. So what happens is, however, that level has been eyeballed, right? And it's now become a level where people have been making money. So so there's no stops there, but what it is it's become an attractive level. It's been defended historically, and those who participated in it over here have made money. So when it comes back to the level, it's going to have to react, and if it doesn't react, if it just goes straight up through the level and then you get a drop, that is not a stop hunt, because there's no money there, right? There's no stops there, and if price just goes up through the level without any entry cheese in here, then nobody entered the trade. So going to the current example, look at this touch, right? Now this touch did not make it to those lows, and you would imagine that if you were selling off there, and this is a bit of a range, if you were selling off there, this would be sort of a major target for some profit taking. It didn't make it, and then look at how price then aggressively reversed. Now there's a bit of a demand level there, whatever, people may have took some money off there, but I'm just trying to make the case and explain it to you. That's why we're going over this. Look at the way that it aggressively goes back to the level. If you sold in here, you probably would still be holding that position. Would you agree with that? Some might, some might not agree with it, but some will have made money, right? Some people who sold there have gone. That was enough money for them. But there'll be others who are still in that. And what that means about this trade is there are stops still here, because when it revisits, these traders are still short, right? Because of the nature that it aggressively moved back against them, and it never made it to what would be a reasonable target. So there's stops there. So now there's an accumulation of stops. Now the final part, because of that failure to follow through, now the final part is the sell-off at the level is another sell-off at the level is just golden, right? It's perfect. It just adds weight to that whole equation. Then now, if someone sold in there, then we know for a fact there's stops there. We can be fairly certain there's a degree of stops there. There's not all the stops from all the traders who sold, because as I said, some will have taken money here, but there'll be some that held, and especially by way of the nature that it turned on them. That type of price action is what catches a trader in the headlights and stops them from making decisions. It's your objectivity wanes slightly. You've had some money, and now it's just like evaporating in front of your eyes. You get a little bit caught potentially, so you'll hold. See, stops are there, right? Sells off again. Traders now come in, believing the level's gonna go, and they put their fresh stops at the level, right? Nobody's bounced really out of that. You know, a handful will have done, and then price aggressively goes up. There's your cheese, there's your toast, and nails them. And these guys are wondering, guys and girls are wondering what the hell happened when price is down in here. They're like super pissed because they sold there, right? They weren't wrong. The problem is the moves are too obvious, and they didn't wait. They're not thinking strategically. Then, you know, as pathetic as wait, you know, it's an oversimplification to say they just didn't wait. They don't understand that process. But you know, from our perspective, we just sit and wait. But we understand that process so that we can walk through it, and we can understand what's just occurred. So here's your manipulation. Actually, let me just zoom in a bit. So I'll look at it. There's your manipulation. Right there. Takes out those stops. And so the idea is that if you're a seller at the level in here, your stop loss placement means if you're a seller, those are buy orders. So if something big wants to do some selling, it needs a lot of buying to go off. So as price is going up through the level, those buy orders being triggered, and something on the other side of that that's big, it starts to sell in the face of that buying efficiently. There's no retracement traders in this process, so what you'll sometimes see is, or quite often you'll see that. This just has the first willing buy in this entire process. So these people are not willing buyers. They're sold in there, and they're pissed that they got stopped out. But buying occurred nevertheless. But as price breaks up through the level, especially that candle, just imagine that candle at the hard right edge. That's a breakout trader's dream, right? Well, sharp turned into a nightmare, and there was no retracement. There was no retracement in that process, but the retracement can obviously and does regularly occur. So there you go. Just thought I'd run through that. It's a pretty interesting manipulation. They always look different. That's the cool thing about them, because it makes it difficult for people to see the patterns. So while it presents itself differently, the process is constant. It's always the same. It just presents itself a little differently, and that's what we want it to do, because then it's not obvious what we're doing. So, well, we're not doing anything. We're just witnessing this unfold, the manipulation occur, something big do some buying and selling, and then we're just jumping on the coattails of that process. So. Cool. And if you'd like to come join me in my inner circle, today's the day to do it. If you're sat on the fence, because tonight we've got our weekly coaching call, and we'll go over lots of examples like this, so you can really become au fait with this type of trading. If not, I hope you have a good day. If so, I'll see you in the room. Take care.